Evening, everyone. It's a little after 10 Eastern time here, so I'm going to try to keep this short. I know we haven't done a video in a while, but I wanted to go over a couple things here because a few members have reached out to me. Some of them were high fives, and others were some question marks surrounding some entries and exits today. So I just want to touch on a few things. Going to start with the S&P 500, specifically with the ES futures, and then we'll just touch on a couple individual stock trades. But literally, you can see the watch list over here. That's kind of my only plan. I just want to go over a few things. Even if you didn't trade all of these, I think there's a few things that can be helpful. So let's just brush up on them really quick. Today, yesterday we came into the day with a decent amount of selling pressure in Globex, and we pretty much bounced right out of that 44.65 zone. Um, but the buyers really just could not gain any momentum over that 44.90 zone, and we came back into the day under pressure again. We opened very close to the 10-day, and it looked like a potential that we could get, especially when we look at the SPX. We opened at the 10-day and at the gap fill. We opened just above it and then traded down. Buyers did not step in. They wanted to flush some stops below that. There was about a 90% downside day, so that's not too surprising that they did that. But I want to talk about the low here in the ES, which was 44.19 and a half. And when you jump up to the lean, today's lean, this is for Thursday's opening print. Danny here is talking about a support level in the 44.35, 44.40 range, and then he mentions an overshoot of this level could put 44.15 to 44.20 in place. So it's a 5-point range on the downside, and it barely really nicked it at 44.19 half before a big bounce. And I just want to take you down a little bit into the technical zone because I want to cover the sort of the why we were looking at that zone. Again, you can see down here, you know that we bold some of these letters here to put a little extra emphasis on it. When we pull up the ES daily, you can see the 44.18 mark. That's kind of why we threaded that 44.15 to 44.20 zone. It's got the 21-day in there, the 61.8. You can tell, and I'll jump back to the chart here now too. You can kind of see where this level on that when we had that pullback earlier in June, this was a trouble spot, a trouble spot, a trouble spot. It was a resistance over and over and over again. So when we finally push through, we are looking for those prior resistant marks to become support. And when you have multiple catalysts, it just ups the percentage, the likelihood that it's a good risk reward zone. And it's not a perfect zone, but it gives just a good shot. And so I just want to highlight why that was a nice zone, because it gave us a really nice, even just to the bounce on where we ended. It was a 27.5 handle bounce, and we had more than that at one point, not much, but it was a nasty day for the Bulls. So, but I just want to put that out there that this was the zone we were looking at. That's why we were looking at it. I know we mentioned it on Wednesday's opening print, the 618, but I just wanted to reiterate that because entries really, really matter in tapes that get a little trickier. So strong entries give us not only does a strong entry give us a spot where we have a good risk reward, but it also gives us confidence because if we tend to get reactions kind of right out of the zones. And ironically, let's touch on AMD because that did not give us a reaction right out of the zone, but it gave us the move we wanted. And rather than focusing on the entry, I want to focus on the exit because that one was kind of a needle threader for us. This is the one that I was getting messages about because some people missed it in the morning, and this was yesterday morning. So this was Wednesday morning's exit, and I want to touch on it. So you guys remember we were hunting the gap fill here, and what ended up being the 10-week moving average. That's what we were looking for on AMD. Monster stock, great trender. You can see pop, dip, pop, dip. I don't know how long they can run these things, but we got this nice pullback, I think down 7 sessions out of 8. That was pretty decent pullback into a key area. We held the 107. 107 was our stop. We traded 107.08 was the lowest, so it was very close to knocking everyone out. We did get a nice push. Most of these were trims on the way up. I'm not going to pretend we carried a full position to, Wednesday's high of 117.66, but we did make a nice push out of here. We trimmed along the way. It was not as much as I was hoping for. I'm keeping these retracements here, and I hope I'm not talking too fast, but I don't want to keep you guys tied up too long. I was originally looking for a trim kind of in this 10-day, 21-day zone, depending on how far you want to push it. But really, in most trades, I prefer to get into this 50% to 61.8 retracement zone, so 120 to 123 in this case, and make a bulk of my trims there. But AMD just didn't have it. You can tell when it got into this choppy zone. It wasn't going to have the oomph that it needed to get out of it, so that's okay. I want to talk about this exit though because it's important. It's an important tool to put in your toolbox, I guess. My big takeaway here was we were able to push through the 10-day hesitantly, but more importantly, look this big support zone. Just as we talked about with the ES, I'll go back to the ES really quick. When we pulled back, we had resistance, 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 and now we came back, and we reacted out of it as support. That's not to say that this can't roll back over and come down and retest, 43.69, 43.70 zone, and then even down into the 43.50s. But what it is saying is this was a good risk reward zone for a buy, and it's the same thing for AMD. That's not to say that it can't hold this 50-day and push up into this 50% 61.8 retracement zone, and undoubtedly there's a few of you still holding runners against a break-even stop, and that's totally fine. But the point I want to make here is this is the gap up low from late May. This was NVIDIA's earnings on this gap up, and this level continued to hold as support. We knifed through it, so support is gone. This is now flipping from support. Now it's resistance, and you could tell it was going to be resistance because on Monday's candle, we faded so hard from the highs. We were lucky to get an open in this 116 area and a push above Monday's high, 116.73. And I'll try to see. Can try and hold the runners for 120 or exit if we see a push above this week's high, this week's 116.73 high. So that 116.73 high that's Monday's high. So our goal was to exit anything above that, and it ended up giving us 90 cents extra before it tagged this 21-day and reversed super hard. And once we lost Monday's low, that was another sign that it was the right move. It was the right move to trim. And I'm not saying that that's always the way to go. I'm just saying it's best if traders can recognize some of these signs. We didn't get this instant pop out of this zone. Last one I want to touch on is DigitalOcean. I understand I'm past the 5-minute mark, but this one's a little interesting because I've got a couple. This is where we were getting our high fives today. That and the S&P futures. So, but I want to touch on this one because one person did message me about profit taking. I obviously didn't put a note in there today, thinking we were going to go up 13%. So, what they were asking was a few days ago. I mentioned it depends on traders' time frames. I said if they're short-term traders, that what we're really sniffing for here is the 42.50 to 43.50 zone, which, as we just talked about, is the 50% 61.8 retracement zone. And in this case, the 21 days kind of lingering in there too. What was interesting about this one is our entry was this doji where we came down, retested this April high. Oh, excuse me, this Q1 high. The Q1 high was from March 31st, so it was practically April, but It also timed up with this 10-day moving or 10-week moving average. So it was, again, a confluence of a couple different points of interest, and I really love retesting quarterly highs and quarterly lows alongside some kind of trending moving average, whether it's the 21 day, the 10 week, something in that range. The 10-day is great if we can get it with the 10-day, but in this case, this was an interesting one because a lot of traders had the entry, but weren't sure how to manage it because they're not sure, are we trading this on a daily or a weekly time frame? And time frames really, really matter when it comes to exits because it's the difference between scalping a couple dollars a share out of it or swinging for those bigger 5, 10, $20 tranches that we're trying to get. So um, the daily guys, they were exiting on, this is the gap fill, the low is 40.97, call it 41. So when we got this push up to the 10-day and the gap fill, that was our exit. Those were noted in the open positions notes down here. Able to make small trim between 30 around 40 and a second trim above 40.75 near the gap fill. Should be down to about a half position to 60% position with a break even stop. Luckily, we were never tapped out here, but with a move like today's 13%, that's a rare move. You don't usually get one-day moves like that. 78.6 retrace, great area to trim some. Obviously, an area of interest here. So we ran out of steam in early June. It was temporary support. So anything north of 45, great trim. If you didn't get a trim off, we open a little lower. That's okay. Still, I think a good trim. Ideally, the next would be like 47.5. And it really just depends, like growth is trading a lot better, and you can see this much larger retracement setup. The halfway back is all the way up at near 75, $80. So I'm not saying it's going to get there in a straight line, but my thinking is 50 out of the question? I'm not going to say it's only $5 a share from here. If we clear this 47 half, 47 and a quarter, um, that's definitely possible. I mean, 47 and a quarter could get us at least up to 50, 53. You could carry runners into that and then trade a reset. So I don't know. I just want people to think about things in a few different varieties here, and I thought this might be a fun little, apparently now 10 to 15-minute video, but a little bit of a way to look at whether you're trading futures or individuals. Um, there's a little bit of everything in there that you can apply the nuances to each other and get a better feel for improving your entries and improving your exits and that's it. I hope that helps. I hope that you can take some of this video and apply it to our charts and our setups that we put out there in the future. We try to keep things condensed. I know the opening print can be kind of a lot. We've kind of everything going on in here from the technicals to econ calendars, breadth. We have our breadth figures here, the MIM, the recap, Danny's take on what Danny's expecting for the day. We do a lean where we kind of go through the opening. Obviously, you guys are premium members, you know that, but I know there's a lot there, so we try to keep the technical section a little bit tighter and more condensed. In the past, people have said that they don't like the commentary as much around it versus just having the levels and the charts put out right there for them. So we try to keep it as concise as possible, but I know since we've gotten that feedback, we've also had a lot of new members come in, so I'm hoping that this can help just add to your trading arsenal and improve your results. So have a good Friday, good luck, trade them well, and have an even better weekend. Remember to recharge. Good luck. Thanks for watching.